The rising effectiveness of large language models like ChatGPT is causing tens of billions of dollars of investment in expanding data centers for artificial intelligence. That's going to benefit companies like Nvidia and AMD, which produce GPUs and help build out the data centers needed for artificial intelligence training and inference. But which one is a better buy, Nvidia or AMD, if you're an investor trying to benefit from the rising effectiveness of AI? That's the question I'll answer in this video, and I'll compare Nvidia and AMD on critical financial metrics including revenue growth, operating profit margin, cash flow from operations, return on invested capital, and valuation to determine which one I think is the better investment today.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with revenue growth, we noticed something very interesting between Nvidia and AMD over the last 10 years, and that is their revenue growth rates were very similar up until 2023 when Nvidia absolutely exploded. Nvidia's GPUs and full service product offerings were best in class to facilitate the training and inference of AI models. That created a surge in demand for NVIDIA's GPUs, way ahead of that of AMD. Now, NVIDIA has roughly 80% market share in the data center AI accelerator GPUs. AMD recently launched its own product in that category and made a large $5 billion acquisition to help gain market share in that AI data center build out. Still, AMD has yet to experience that boom in demand for its products that Nvidia has experienced since mid 2023. You'll notice in the latest quarter, Nvidia's revenue jumped by a whopping 262%, while AMD's revenue increased by only 9%. Going forward, while I do believe AMD's revenue growth will accelerate, and AMD's management has said as much, I still feel Nvidia's revenue growth will exceed that of AMD's for at least the next several quarters. Nvidia is already developing next generation GPUs, while AMD is still trying to catch up. Now, AMD's acquisition will help because it'll allow AMD to offer more for the AI data center build out, more than just the CPU and GPU. It remains to be seen just how much traction Nvidia will give up to AMD when it's launching its next generation services. Operating profit margin over a trailing 12-month period, Nvidia has held an advantage in this metric for the last decade. Unlike revenue growth where they were more similar, Nvidia's operating profit margin has been well ahead of AMD in the last decade, and that lead has only expanded in the last year and a half or so. Nvidia's operating profit margin of 59.8% is way ahead of AMD at just 3.7%, and while AMD's operating profit margin is likely to recover north of 20%, I don't believe AMD will ever catch Nvidia in this operating profit margin metric because it has a decade of trailing AMD has of Nvidia in this important metric. Nvidia has more pricing power for its products and services because it offers more differentiation and has more relationship with the hyperscalers that are building these data centers. They have more trust in Nvidia's GPUs. They do want to give AMD a chance. They don't want to give all their business to Nvidia. That's too risky for hyperscalers. They do want to give AMD a shot, but their preference is clearly for Nvidia's GPUs. Similar story when we look at cash flow from operations to sales. Nvidia has a clear advantage here at 51% compared to 8% for AMD. And just like the operating profit margin, Nvidia has had a lead in this metric for the last decade. So it's not just this last year and a half that Nvidia has led in this metric. It's led in this metric for the better part of the last decade. And since Nvidia and AMD employ similar business models where they outsource the manufacturing of their GPUs and CPUs, they will benefit from the same trends from the industry and Taiwan Semiconductor, which is the prime manufacturer for their products. The good thing about outsourcing manufacturing is it's an asset light way to build your inventory. You don't have to put out the capital to build these inventories because those semiconductor manufacturing facilities cost billions of dollars to build and maintain, and Taiwan Semiconductor does that for Nvidia and AMD. There is a risk of outsourcing your production, but those risks are offset by the asset light nature of that choice. Now, you could gain some profit margin if you bring that in-house, but given Nvidia's already massive operating profit margin and cash flow from operation, I don't think it would be prudent for Nvidia to bring manufacturing in-house just to gain a few percentage points on profit margin, which is not even certain that they can do that, right? They can achieve that because Taiwan Semiconductor manufacturing has been so excellent that even if Nvidia were to bring it in-house, they perhaps will not be as good as Taiwan Semiconductor is at doing what they do. And so they would lose some efficiency because they wouldn't be as effective as Taiwan Semiconductor. So the profit margin that they're giving up to Taiwan Semiconductor would be offset by the efficiency losses by bringing manufacturing in-house. So for the foreseeable future, I don't see either of these two companies trying to bring manufacturing in-house. They are likely to continue outsourcing that manufacturing. And that brings me to return on invested capital, which is one of the reasons why Nvidia has not decided to manufacture in-house, is because they don't feel that would be a wise use of their capital. They feel their capital is better used on research and development in developing the designs and technology. And then the manufacturing part, they have a great partner in Taiwan Semiconductor. The ROIC for Nvidia at 94%, again, well ahead of AMD at just 2%. And Nvidia has had the lead in this metric going back the whole decade. Now, I will say I don't think Nvidia's ROIC will remain this elevated. I suspect it'll come down back closer to 50% over the next 2 years. Over the next 1 year, it will likely remain elevated. But over the next 2 years, as Nvidia's pricing power diminishes slightly, as competition enters, not just from AMD, but there's competition from Amazon and Alphabet that are creating their own chips that are used in their own data centers. Now, they're not as good as Nvidia's, but they are replacing some demand, and that will bring down Nvidia's pricing power, and that will create more of a fragmented market where right now Nvidia's market share is so dominant. I suspect that will decrease and diminish over the next several years as industries will diversify slightly away from Nvidia's GPUs. And finally, I wanted to compare these two on valuation. Nvidia is trading at a forward PE of 32, where AMD is trading at a forward PE of 28. So Nvidia is not that much more expensive than AMD when measured by the forward price to earnings. And Nvidia was so clearly ahead of AMD on so many of these important financial metrics. And finally, Nvidia is so far ahead of AMD in terms of the technology of its GPUs and the technology it offers to companies that are developing AI data centers, that if you were to pick between these two, if I had to pick between these two, I would pick Nvidia as the better AI stock to buy today. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.